Right, let's just start it then.
Sorry.
Perfect. So yeah, let's just start from the questions. You guys can start asking the stuff. Well, I don't have any specific thing to do in my mind. I might break this down the last day, but that will be at the end. So, yep. If you guys like having some sort of questions, like go ahead, ask it. Or else I'll just break this day down.
Actually, I do want to ask something.
Yep.
Um, After the news, it was clear the fact that the market was going down, or it was a bit, how can I say that, dangerous place an order,
Cool.
a
So
trade to place an order in a sell.
good. So for me, the sell was good because I do have the good liquidity points, which are like this low, and then we do have this. So these are two attraction points for price for me to go down lower, and then for the highs, if it's clear that we induce this double top right there, so inducement high to go lower, and then this is you know from this point down low to this high, this is your internal structure that you can play out, right? And like by looking at that, we do have the nearest liquidity point would be this low, which is previous day low, as well as this previous day high, right? So now price wicked out the both, right? So and then the nearest liquidity point to this low was this, and then this was more relevant because we are coming from the inducement high from the high time frame as well. So that was one way to think that market will go down.
Hey, why the maximum up there was an inducement?
The high or the low?
The high.
Because this one.
Ah, okay. No, no, I see it now.
Because
See it.
we had this Asian high as well as the previous day high, right? And then which is again coming from if I mark this stuff out, you guys see this sort of double top, or you guys can also see this as a sort of resistance level forming, right? So we have this resistance level getting rejection once, twice, and then the third top which had this false reaction, and then we induce that, right? And basically we were again mitigating this level of inducement, which again was a nice little liquidity build up. So we are just following the inducement from the high side, right? And then we induced this level of the liquidity into all this stuff, so you can like grab this stuff out like this, and this is your nice little point of interest. You can like go down and refine it as well to this candle high, stuff like this. So this would be your sort of the lit cycle of higher time frame. So we have this buildup of liquidity, double top, so this would be your channel. We have double bottom, have trend line induced, took out this high which is internal, had the reaction, took out this liquidity point. Now everything becomes liquidity to the upside. We wick that and then we start going lower. It's just like getting yourself the valid liquidity points. And after the news, we had like really good sell opportunity right in there as well, which was really clean. And for that, the target was this low, which led to this new high. And then obviously I do have one more liquidity point, which is this, and I think it is kind of weekly low as well. Yeah, so we have this, there we go. Is this Monday? No, so we had this weekly low. which I'll just move down there. Good. Do you guys have like any other question?
Yeah, I would like to ask, do you only use lead?
uh, you can say that mostly I do use it, like, but yeah, it's not like using lit only, but you need to develop a good sense of liquidity as well. It's not about it's about the cycle as well, but you need to understand the relevance of the liquidity as well, like where price can go next, because price can't always take all the liquidity. So it will engineer some sort of liquidity, something like this, go down. It's not necessary that price will come up there and again take this high, so you just need to focus on that as well, but mostly it's lit as well.
Okay, thank you.
Good. And yeah, one more thing, like EPA and IPAs, it's not something that is that much complicated. So it is just an inefficiencies in the market structure. So let's just say that in a bullish trend, if the price is mitigating the last high point, right, we can say that the market structure is efficient. But if we do have something like this, right, price never came back to that last high level, we can say that there is inefficiency, and price can take this high as an attraction point and return back there. So it could be something, a breakout structure to the upside. We can utilize this low as an inducement level, go back to that EPA level, and then we can trade away from that. So this low acts as your inducement. Probably you might also find yourself sort of decisional point of interest in there. So that is a basic general idea of EPAs and IPAs. Cool. Any other stuff you guys have? Let me just get some sort of examples as well down there. The cool. So let's just start from in here, right? So we'll just start by mapping out normal market structure. So low, high, low, high, low, high, low, right? It is just like mitigating the last level points, right? This is what you call yourselves struck the efficient price action, and we can always use the high that made the price action efficient as an inducement point for the extreme mitigation zones, like in this case. And we can plan a nice sell entry on here, and then target whatever the next liquidity point is, which in this case could be this low, but it is coming from this low, so I can target all that stuff as well. So this would be something, a nice little 18-hour trade as well. And then we do have, yep, so low, high, right? This was the low which created this high and then broke the structure. And for that, after this break, price needs to come back in there, and that's what price did in here. Decisional pointer entries, usually I don't use that much the decisional order blocks, unless or until it is like aligning with my higher time frame IFC level or the IPA level. But let me just get a nice one, right? So let's just try to find in this day. I don't really see any sort of good example in here, right? Let me just go a bit back as well. Cool. So yeah, this would be some sort of your like the decisional entry. So this would be a breakout structure, and then we do have two point of interest, which would be an extreme point of interest, and then the one which led to breakout structure, which is this one. So and then it is same, right? So we do have a nice SMC breakout structure to the upside. This, if that's an SMC breakout structure, for me this is a smart money trap. SMT, which is liquidity, we induce that into this point of interest, which is coming from this level of internal liquidity cycle as well. So this would be a nice little buy entry on this mitigation of the point of interest. Alright, good. So about the liquidity, to know which side of the market is going to go first is simple, that you need to bit zoom out and see the intention of the market. By intentions I mean the momentum of the market, right? On the intraday level it is going to be different than the higher time frame, and once you get those two right and you decipher the previous day, you can pretty much get to know like which side is going to go, market is going to drop which side. So let's just say that in this case we had like a bit of not that much bearish momentum to the downside, but somewhat of bearish momentum, and with that we see a level of resistance forming in here, right? So like this, right, which had the inducement and there, so this becomes my inducement point of interest. But this whole stuff, with that we do have what we do have liquidity build up just inside that point of interest, and I can refine it to this level which got mitigated in there. So one side is clear that we had inducement highs to go lower. Now I'd like to see my internal leg from this low to that high and start identifying the liquidity. So now why everything is liquidity in there is that because everything is effectively mitigated, which leads to all of this become my liquidity target as first. We took out that target, we had the reaction, right, and then we moved away to the next target. Of awakening, can you give any suggestions? Don't move to the new chapter unless or until you start understanding the things that are taught in your current chapter. Like if it's inducement, right, try to practice the inducement concept first before moving to the next chapter. That would be really helpful for you. If you see any lecture, go practice at it until you get that right, and then move towards the next concept. That would be really good. So yeah, in this case we have this leg which goes up by mitigating everything. So that is my first target. That's why I said that this low was coming from this, so I took it as my first target. And if you want to go bit more deeper into the candlesticks, you can see that this low is coming to this, right, and then we have this final detachment. So you can actually consider this as your target as well, and which price took out in there to fill this imbalance. Honestly, my checklist isn't that big, but what I do mainly is that I do see what's happening in the Asian session, right? The momentum of the market, the inducement from the upside and the low side as well. So we are inducing on the both sides, and then my liquidity points. That's it. I wait for inducement of my liquidity points, and then wait for possible once, right? So one thing that I do see is that you guys mark up your point of interest straight away. I don't do that, right? I see level of liquidity being induced, and then I see where market is inducing that liquidity. In this case, we induce this high into this point of interest. So when the liquidity is induced, then afterwards I go and mark this point of interest mitigation.
Okay, so actually you are saying that POIs are truly POIs only when market already took some liquidity, some
Yeah,
sort of.
so consider POS as a confidence, right? POIs aren't your whole strategy. So once you start like drawing your zones, like I have a zone in there, I'll be like much more biased to trade that zone. So I don't do that. Let's just say that I have this liquidity point. Once it's induced, I'll look to the left, right? I'll look to the left where it is inducing. So if it is a valid mitigation, in this case it is coming from another level of inducement, which is again coming from another level of inducement. So that is what how I end up marking my point of interest, and that's a good sign of POI that it is uh, mitigating as the result of the cycle completion.
Okay, so actually, for example, the somewhere between the 10 a.m.
Sorry, can you repeat it?
Sorry, around the 10 a.m. of the morning.
In here?
Uh, yeah, right there. It
Yep.
was an inducement, right?
Yep. So let me just show you, right?
To the right of
Yes,
the maxi
exactly,
of
exactly. So in here, in this
okay.
would be the case that so let's just say that this was a point of inducement, right? This is an high which gave us this break of structure. Although it's an internal break of structure, but this is a high where a lot of SMC guys are going to be entering. So this is a nice little smart money trap. And then, as I told you, same case in there, I need to identify from where this high is coming from. So if I look to the left, right, this high is coming from something in there, and then we have this detachment. So I can connect this high to this as my point of liquidity, and that's when price end up taking it. So once it's done, it's in valid timing. I see I have this weaker zone. Now why it is a weaker zone? Because I do have still a bit of liquidity uplift, and as I told you, price is not always going to take out every liquidity zone, right? So cycle completion in there, and now I look to the downside as well. So same thing in there. What do I have? I have liquidity. Everything is effectively mitigated. We don't have anything valid to react from. With that, I see a double bottom as well, right? And that is, and I think in here, yep, this is going to be a fake breakout structure to the upside. So an SMC breakout structure, this will be the point of interest that they'll be interesting from buying, and this will become an SMT. And with that, we end up taking out this liquidity.
It. Thanks.
Yeah, I'll upload this on the YouTube. Cool. So alright. So how I take my partials or how I take my TPS is simple, right? It's just based on the intraday liquidity scenarios, right? I don't extend my TPs to 1:30 or 50 depending on the high time frame liquidity levels, because I want to be in and out of a trade in like 1 hour or few minutes. So basically, let's just say that if I'm entering in here, right? So if I'm looking to sell uh, right up here, I'll be targeting the nearest liquidity point, which, as I just like explained, this would be a nice liquidity point because this low is responsible for inducement of this liquidity with this mitigation zone, and with that it gave you a nice little SMC breakout structure, and this will be the area they'll be interested in buying. So this is the nearest liquidity point for me to get my partials or the TP. So if we had some sort of structure in between like this, right, then I'll be having this low as my first take profit level, not this low. But in this case, we do only have this low. That is why I'm taking my partials at this low only. That's it. And then it's the same way that I just did in there, like I start looking like from these lows, where are they coming from, and the last point of detachment in the market, and that's where usually my full TP is. Yep, so price is fractal and you can like utilize the concepts on every time frame. uh, you can really determine that by looking at the reaction from the POI mitigation. If price really wants to move away from it, it won't, you know, you can say that move in that POI for that long. For me, like sitting on the charts on live market and then seeing it rather than backtesting, that's what worked for me, because on live market it's always different stuff. And obviously, don't go for the prop firm, just deposit $100 in your account and start trading it with 0.01 load. That's it. You don't need to be making $1,000 or of 10,000 in a single trade, just starting off. Like, build your confidence to $100 account, probably trade that for a month, 2 or 3 months, till you get the concepts, and then you can buy your very first prop firm challenge, which should be the lowest one. I don't mark any sort of protected highs and lows. It is just the highs and lows for me. That's it. The one that I like most are the ones, the highs or lows that are inducing some sort of liquidity level. So in this case, inducement, this is a high that I'll be most interested in. Right? If I don't want price to go above this high, while because it's coming from an inducement level. That's basically it. Cool. So suppose good. So if it and if I'm in a short form body POI. Cool. So if let's just say that price mitigated a supply zone and then it came down to a demand zone, how you can know that if it's going to reverse or not? That that you will see when price mitigates, that probably it is going to do some sort of like this, or even if it is getting a rejection from that. Let's just say that price had something like this. So if it gets rejection, you will see in this region, in this leg, how price is moving towards, moving away from that point of interest. If it's sort of build up, you can pretty much identify the start of a new lower time frame cycle, build up, inducement, and then to go lower. It all depends on the reaction. That's why I just don't mark out the POI straightforward. Or your supply zone could be something like this. So demand zone, price is coming from an inducement high, right? And it is impulsive, right? So if there is no liquidity being induced into the zone, I won't be even bothering the zone. I won't be marking that stuff. It really depends on the reaction that you are getting from the zone. My trades, right? Let me just get that stuff right now. Yeah, this week the trades that I took were mostly in the golds, right? I think I took 2 trades in GU. I was kind of busy this week, so I couldn't trade the whole London sessions for the week. I was just like trading the 1 hour of the New York session, which is the trap timing. That's it. So I took like few trades, but I did took like some good trades in the gold as well. I'll show that in a while. Now, like intraday aspects, you can really, really much get a big trade. Like I won't say that you start aiming for 1:20s or 1:30s. Like if you're coming from 1:2 or 1:1, anything which is like greater than 1:5 is really good for you. And develop a sustainable partial taking system that will help you build
Have
a
you
good
ever
capital.
heard about DTFX?
Who?
DTFX?
No, man.
No, he just teach you to like go one-to-one risk reward.
No, no,
That's all.
no. I've been into really that much social media, trading stuff, right? Educational content. So Asian midline, like they can act as a sort of resistance or support for price to bounce off, and same goes with the daily open as well. That's it. But we again don't trade that blindly. It needs to be with a bunch of confidences. I don't get the buys for the day, right? As I said earlier, I just look for the inducements that's happening on the both side, right? So, like if I'm coming, this is the start of my like week. I'll see the inducements that are happening of on the high side and on the low side as well, and then from there, I'll start creating a context. That's how I use it, and then for the direction I kind of use the Asian session and then the liquidity points. No, I don't use DXY. So this is EU. I did get some sort of buys in there, so let me just show you the buys on the Friday. My network is kind of bad today, so all right, good. So I had buys in there. So I took some nice little buys on this candle breaking up. Stops were down there. I had my break even in there, and then I was targeting some sort of this liquidity high, which I got break even. Though I took partials at right somewhere around 4 hours. Yep. So I had my partials at 4 hours. There we go. So this was partial and then hit break even. It was a pullback trade that I was expecting price to go this high and then go lower, but it didn't like give me that much move. Though still I made like couple of percent and there. And that was like my trade on the Euro USD on Friday. Let me just pull up the gold. Can I know for POIs valid SMT. Well, like as I said, I don't really mark my POIs right before. I just wait for for the cycle to complete and then see where it is completing it into. But I can tell you one thing, that the POIs that is having an inducement level is going to be much more good, or the POI that is coming from an inducement, which we call it the inducement POI. So these two are the one that has much more precedence. Like, what do you mean by the true day or week, right? If you ask me the best days to trade, that would be Tuesday or Wednesday, honestly. Like, can you explain the true day something? What's that? Because for me, right, the best days are the Tuesdays and the Wednesdays. So in here we had this nice little buying opportunities. This was also the continuation and then the reversal. So Wednesdays and Tuesdays, these are two good days to trade. So you guys have like any more questions? Alright, so the it's the matter regarding the POI. Cool. So let's just say that I have this high as the liquidity point, right? Price goes there, price builds up, induce that, right? So a POI which is formed as a result of inducement is the one that I'll be looking for most, right? And then the continuation of that POI. So there.
But even this one, you're not sending it up on the graph right away. You just watch later on if it took some sort of liquidity, right?
Now, the liquidity should be relevant for price to reverse. That is why it is really
Okay.
important. And then, right, not every liquidity inducement is, inducement is going to give you a reversal. It could be a pullback. So let's just say that we took out inducement lows right there. So let's just connect this stuff. We had a mitigation in there as well. So let's just say that price took out this, right, took out the liquidity as well. So let's just create this slowdown there. So it is all sort of mitigated, right? Took out the high, took out this liquidity. So now we can probably break this low, this high as well. So it could be SMT, which is the result of a pullback trade. So that is why not every inducement high or low is going to give you the reversals. It all depends on the context of the market. So it's not that the price took out this high so you can start to look for the reversals. You need to study this from this low to this high, this leg as well, what's happening in there. In the Asian session, I pretty much look for what Asia is doing, right? Mostly, if Asia, mostly Asia creates a false trend, and you see that we created a false trend which is bearish, and then price moves in a bullish manner. Or see if Asia is taking out any sort of liquidity, and then the third case is that if Asia is right after any good inducement, right? So I can expect an Asia continuation. I don't expect price to take out Asia high or low. I expect price to continue in the direction of Asia. London. All right, cool. So it's the same thing. Like I wait for my liquidity areas, wait for price to induce them, have my confirmations, have the valid timing, all the confidence, and then I take the trade. Doesn't matter, but the time should be good for me to enter trade. Let me just find. In here would be a nice entry. Good, there we go. So we do have this wick, right? I'll mark right, which is inducing this low, mitigating this point of interest. Let me just mark these as my point of interest. On the high side, what do I see? I see my double top, right? And then that same thing in this case, you see that everyone was like waiting for this inducement, right, to become a reversal level, and for price to go and get this low, gets trapped into this SMT. You can like also see those on the higher time frame inducement levels as well. So let's just say that if price, this is an H4 level, right? If price took out this H4 low, right, as an inducement, right, most of guys try to look for buys and target this H4 high, considering that this high led to this inducement low and they don't have anything in the context like what price is doing. So price can do something like this on intraday level, go up there and then reverse from there. That's how you develop the context around the trade that you are willing to take. Cool. Like any other questions?
Buzz Mag.
It's like, no, I don't trade every pair differently. You can say that the picture of that setup or of that pair could be a bit different than others, but it is always following the same system, the same rules, right? So that doesn't mean that if it's a bit different visually, that doesn't mean it's different completely. It's just doing the same thing, but you know, it's visually different. The context behind or the approach behind it's the same. I don't have any like correlated stuff. I don't use GXY, that stuff. I have like my main pairs, which are EU-GU, Nasdaq, US30, and then I have the gold. That's it. No DXY, no nothing. I was trading like you can say that basic SMC with sort of wake up stuff, right? And from there I learned about lit. So actually I did start learning. I started trading because of the crypto, and in there the trend line works really good. So from trend line to the order blocks, SMC to wake up, because wake up accumulation is really good in the crypto markets on higher time frame, and then from that to intraday aspects of liquidity inducement. Yeah, I do trade cryptos. I do trade that stuff. Not futures that much, but I'm trading that quite actively in the sport. But yeah, Bitcoin, you can also day trade that. Meme coins, I do have friends that trade meme coins. You can say that I started trading meme coins like 4 months ago, and then I stopped like after a week. It wasn't that worth it for me. Sorry. Honestly, I didn't make that much in the meme coin. That was like mostly rug pulls, that stuff. So I just, yeah, that is very time consuming. You need to be quite socially active on the Twitter as well. So that's not like my taste. I like to be on charts for an hour or two each session, and if I see something I take it, if I don't see something I don't take it. That's it. The next day continues. But if you ask me like regarding some sort of crypto sport stuff, I can like share some of those because I am like actively trading those stuff. So I do have a good portfolio in sport. I am holding Ethereum. With that, I do have TRX with me. I'm buying like TON, which is Telegram backed, and I do have SUI for the new bull run. So these 3-4 coins are the ones that I'm looking most. And I did share 2 projects that I bought as well. So obviously I don't like go all in. I do use the DC approach. So like I buy, let's say an example. So if I want to invest $1,000, right? So $1,000, I'll try to DCA like $100 per week, right? So I'll buy that coin for probably 10 weeks, $100 for till I like invested a total of $1,000 in that coin they use. Now I trade real account. I don't. I used to trade the funded accounts, but now I trade my personal account. And honestly, I do think that 2025 is going to be kind of good for the crypto spot coins, right? So if you want to start crypto, right, the best way is that you start to learn how the money flow works in the crypto, right? So it goes from the major coins, Bitcoin, Ethereum, to the layer one to the newly based coins. So that's, and then again to Bitcoin, that stuff. So that's how you can make good money from the crypto. No, I'm not from India, bro. So I do use fusion markets mainly. So the very best way to like get into crypto is to learn how the cash flow works. So it's really good. Let me just get something for the crypto. I don't know if you guys can see this. Yep, you guys can see. So this is the simple money flow in the crypto, right? So once the money flows from Bitcoin to large caps, right? Because these two are the ones that, if you have a small portfolio, a small like investment, you want to avoid these to the Bitcoin in the large caps. Once the crypto flow starts in mid caps, you can get into the good narratives, and the mid caps and the low caps are the ones that makes you the more money. So it's simple, like from normal like cash to the Bitcoin to the large caps, the mid caps and the low caps. You can like learn on YouTube is like in a few start by learning the fundamentals of crypto, right? And one more thing, right? So every bull run has its own narrative, right? So you can't expect the same gains from the coin that's like performed in the past years. So try to get into the new narrative. So in the coming like this year, I am quite heavily bullish on the quantum fusion networks, right? The quantum computing stuff. So I am much more interested looking in the projects that are related to the quantum network. Yeah, I'll share the stuff regarding the crypto as well. I'll share all the stuff. Let me just get the coin card. So this in here as well, this is really important. So all right. So this one, yeah, that's the one which really fucks up all the alts. It's really bad. The BTC dominance and the USD dominance. That's that. If I'm trading crypto, I do see those too. So I am like in this project, right? It's not a financial advice, but I am in this project and I'm quite bullish in this one. Though it's for the, you can say that longer run. I have just bought these and I'm just simply waiting. Right, I forgot like in which wallet this one is, and that's it. Right, so this is the one. I am into this one as well. The SUI, I have bought it like at 1.74 something. So I'm into this one as well. I am into, I bought this as well. And I've bought these as well. Yeah, I look at both the BTC dominance and the USD dominance. So I mean, I bought this as well, and with that I have TRX. There we go. So yeah, and I'm into in this project as well. So one more project, like let me just get that from my messages. Yeah, sure. Like I'm, really into crypto stuff. So yeah, I think it's really good. Like we have, if we have like crypto so far, so it's better like if we can make money early, right? So crypto is really good for me. Like I started from crypto, all this trading stuff, the stocks, etc. So I won't be like leaving it behind now. All right, so I do have a few more projects that I'm so this one, there we go. So I do have this project as well in my portfolio. SEI. With that, I have there we go. TH. There we go. I have this as well, and with that, I am looking at layer 0. There we go. So yeah, basically these are the ones that I'm holding in big quantity. Other entry points, I don't really have that other entry points. Usually I like trading from the extreme points, right? So that's when the market is like much more favorable for for both the win rate as well as the risk to reward ratio. Yeah, let's just quickly break this trade down and then end this trade. So we have this liquidity level which induced into this mitigation, right? And then I have this trend line being forming a channel as well. So with that, I have this as well, liquidity above. So there we go, we have liquidity above, and then we have liquidity below, as this is the previous daily low. With that in Asia, so if you are like assuming buys from here, I wouldn't take it because it isn't my time window, so I'll just skip that one. With that, this high is coming from this one, and then we have that detachment. Once we had this inducement, the cycle is completed, and I'll see where it is mitigating. It is mitigating to here, which if I would zoom in, you guys can see a sort of internal liquidity cycle. So we have this sort of internal channel, we have inducement, right? So there we go, and then we could have entered a nice little M1 entry with the stops above there. First target would be this one, and then as I said, the second target would be this one. So this would be your first trade, right? I don't usually take the continuations. With that being said, we had a pullback buy on M1 that I took. There we go. So in here we took out a level of liquidity. So what can I expect? I can expect a nice reaction. This was the trade where I market executed, right? So stops below this one. This was the nearest liquidity point on internal structure where I went break even, and then 4 hour were for the partials. Full TP was right up there. Though if you like to scale in, so this would be your nice little scale in, a normal breakout structure to the downside. We have a trend line liquidity which we induced with speed and momentum, with a vector push into this mitigation, and then we can enter enter over here. Though I usually don't like entering that low when we are that close to the liquidity point, because the risk reward isn't that good for me. And there we go. So basically these two, and if you trade like early, this I don't trade like from this first hour, I don't trade like till here. There we go. I trade afterwards when Frankfurt opens. So these are your two trades, and what confirmation do we have? We have like your relative breakup structure. That being said, we have a lower time frame liquidity cycle build up inducement with the vector. Where is it going? It is going into this one, and I can take a trade. So it's on you if you put your stop loss right up there or up the high. For me, it's always above the high, and that's it. So this would be your good trades. Though I missed this sell trades, I had this marked up, this POI marked up, but I missed that sell.
Yuck.
So yeah, I missed the sells and there, but yeah. So if you like to sell, I'll be saying this stops above this high, right? So the nearest liquidity point is going to be this news low, and then the full TP would be this. So these are going to be your trades that are following the proper liquidity cycles and all those scenarios. And if I bet zoom in, you can also see the same stuff. We have liquidity build up, inducement into the POI, a cycle completion, and then we have that drop till where? Till this nearest liquidity point. Yep, these are your trades for the Friday. And let me share real quick my gold trades. Right, good. So these are the two trades that I took. I had these gold buys. I got like break even in there, and then I had, I think, a re-entry just after we had this internal breakout structure, and this candle closed, tops was below this low, and obviously the target was this. So this was my first trade of the week for the gold. And then the second was this one. This was nice little 12-hour trade. So it's simple. We had inducement, breakout structure. We had Asia, you know, like, sorry. We had Asia taking out this level of liquidity, right? And then another breakout structure. We have build up of liquidity. We have trend line. We had this trend line, right? Cool. And then again, same thing. So we mitigated build up of liquidity, inducement with vector push, everything right into this one. And then we had your relative breakout structure, but it wasn't my timing, so I did execute it there. What I had is New York opens, came back to this EPA level and IFC level. With that, I had this M1 entry right there, and then this was nice little trade. And obviously this was the nearest liquidity point, so I took partials out here and then full TP out there. These are my two good trades for the gold. Yep. So you can say that the first trade was partials round at I think this mitigation stuff. Yep. So at like this 3.6 hours, and then it hit break even, and then I had second trade which was like around 7.4 hours. Third trade was this like 12-hour trade. And like that's pretty much it for the gold. And yeah, I was waiting for gold to come back at this point when we took out this inducement low, right? But it didn't back, so I missed these buy opportunities. Yeah, with this being said, you guys have like any other questions, or we'll just end this one? Yeah, we'll do backtesting sessions. Today my internet wasn't that good. You can see that it still isn't that good. I didn't took any trade on Monday. Man, that's very personal. Can't really say in here. I didn't took like any trade on Monday, but if you say that the one that I marked up earlier was that this, so we had this breakout structure after an inducement of a higher time frame. So this is what the higher time frame actually looked like, right? Inducement. So this is what the higher time frame looked like on H4, and this low in here is this low, right? So that, with that being said, we have a higher time frame context, and I think we mitigated a higher time frame point of interest as well. So it is a continuational pattern, right? With that, we have internal level of liquidity cycle, sorry, internal level of inducement. So breakout structure to the upside, inducement low, right? With build up, inducement low, came up as everything mitigated till till this point, mitigated, same thing, breakout structure, inducement low, and in here we could have looked for a nice little M1 entry. So this is your Monday's trade with this high time frame context, right? And when we have like these sort of big gap down or gap ups, right? It's really good, like if you can trade that day, because mostly price will go up and mitigate that, or you can say that fill up that gap. So it is kind of a nice opportunity. So this is your 4-hour structure that I just drawn. So level of liquidity, which is being induced into this point of interest, mitigated in there. We have this big gap down. So in the bias would be really good. All right, good. So how do you know the low has been made and it's not going to go lower? If price took a nice, like you can say that if everything is aligned, where is that, man? Cool, so let's just use it. So the momentum is bearish, right? We are trading downwards, price took a high. Cool, so you need to see, you'll be seeing these patterns really good. So for the continuation, we always do this stuff, right, to go lower. And if you can like get this pattern every time, it's going to be really good, because that's how market tends to go lower or higher. And in the bullish case, if market wants to go higher, it is going to do something like this. So your false breakout structure, right, or inducement into probably mitigation of something to the left. So now with that, I want to see like a couple of things happening in there till I am confident in that higher low being made as a protected, or a guy like texted as a protected high. So completion of cycles, something relevant to the left which can sponsor the move down. It could be an inducement or a valid mitigation, valid timing, and a valid entry confirmation. That's pretty much it. So if we zoom in here, we can see something like this. Now this becomes your inducement POI, and then with that we don't take out every liquidity to the left, right? So first till we have this low as liquidity, we have this low as liquidity, and then this low as liquidity, right? Till, right, one more thing, I am interested in this point of interest until we have a liquidity zone or a liquidity pool, right, which price is attracted towards it. So if price check out this level of liquidity without being mitigating this zone, I won't consider this as my entry opportunity now. So I'll be waiting for more confidences. But if price do something this adds to that liquidity more, then I'm more interested in taking out that trade. So in here, let's just say that price mitigated this SMT zone, give them a false reaction, mitigates the true point of interest for me. Now I'm really, interested in taking out all, this liquidity that is below these lows. Cool. And if price took out this level of liquidity first, I'm not interested in this point of interest for sells unless or until we show more confidences. So yes, you can trade the SMTs as well, but you need to be aware like where you are exiting your trade, where you can get out and when to get out. That's really important, right? You need to know your exit if you're trading a high time frame SMTs, because a high time frame SMT can give probably a direction for the whole day. So yeah, so what we can see in there is again some sort of like a liquidity cycle inducement, buys and then sells again. So a nice trade in here to there, and but this trade in here is always your riskier one. So this is the trade that you don't want to trade, but it is still a valid trade and you can take it, but the risk is much higher on that trade. And obviously there's other factor that if this trade is only like giving me, let's just say that 1:3 or less than 1:5, I won't even take that trade. But if it is like more than 1:5, something like this, then I can take that trade. Like why you want to like ping pong when you can get a one single good trade for the day and you are done for the day? Like why just take extra risk? You can get a one single good trade and you are done for the whole week, right?
Easy, but
And you need to create patience. You need to be patient. Patient tips, just like come to the charts when it's your time and leave if you don't have anything. So for me, I had like a 1 hour and 30-minute window for the London session, right? And then 2-hour windows for the New York session. That's it for the whole day. And then I turn my like PC off over the charts off, and then I start doing something else like read a book or play some sort of game. Or like you can just go out. Man, I discussed like regarding the EPS and IPS. That's just the inefficiencies in the market structure. So this is your EPA level in which price comes back and taps the previous high or low, right? And when we don't have price tapping that previous high or low, we can always use this low as inducement for this, because we know that market needs to be efficient and price will come back and this will act as an attraction point for price. So probably some sort of like this, and then again go higher. So now this is obviously the same thing, the same continuational pattern which happens again and again and again. So if you can like master this pattern, you are really good to go. So this pattern is right in there, and then with that probably you can get sort of a point of interest mitigation. Asia could be right up in there. This could be a previous day low inducement into this, go buys. That's it. In here or in this? This one. Yep. So like where you want to enter, like you're saying something like this. Now it's just like confluence, like it's not always you'll get a POI with the EPA or IPA level, right? And then again you aren't trading the EPA and IPA alone. That is just one confluence. Inducement could be next, Asian session in here could be another confluence, timing could be another confluence, entry confirmation could be also a confluence. So you always need to stack those up. But this one in here is the thing that if you can identify it, you can pretty much like make money in the markets. That's simple as that. Yep, so this is EPA in which price comes back to upset last high, and then this is the one in which price don't like come back to the previous high, it creates a new high or low. Sorry man, yeah, I turned my mic off. Good. So yeah, which line like you are talking about, the red one or this one? Yes, the red one got induced, right? Because we know that this EPA level acts as an attraction point for price to come back and efficient the market. So we can utilize this low as an inducement point, right? For this mitigation, or you can say that for this high to get tapped back. So this liquidity could fuel the move for price to go higher. Yep, it got induced. So the low got induced to go higher. That's it. Which one? This one? This like it is simple, right? In any let me just remove the drawing school. Right, so in a bullish scenario, right, what are we waiting for? We are waiting for inducement low to go higher. So on the charts it might be a bit different, but this inducement, so if you can get this inducement for the continuation, right, you are going to make money. That's the simplest thing. If you can like truly master this one, that this is your bread and butter. So in bearish case, this would be something like this. So inducement, you try to stay away from your normal smart money breakout structures like this. You wait for a nice little inducement in this case, and then you from there starts to stack up the confluences, probably to buy from here to sell from there. My common setups, it's like mostly the intraday scenario. So the Asia user saying like Asia session like helps me really identify the next move. It's the general inducement, like the liquidity points of the market being induced, and then the liquidity cycle, all those stuff. Like, I don't have that much setups. Like for me, every setup is kind of same, right? Because it is following my rules or my main confluences, which is cycle, timing, inducement. These are my main and yep, sorry, liquidity to target. So these are my main, you can say that the confluence. That's it. So pretty much my every trade is always following this one. So it's pretty much same for me. That depends, right? So I do have few like entry models, like you can say that from the very risky to the safest one. So that's it. But like if you are like afraid that price is going to miss you out and you want to raise 0.5%, right? It's bad. 0.5%, you just take 0.2% as an aggressive entry and wait for 0.3% as a safer entry. So in this way you don't miss out. That's what I also do until now. When I take an aggressive entry, that's a small part of my total risk that I'm willing to put on that trade. Yep, it is recording. So let's just say that, sorry. Good. If I go in here, right, I see a nice little reaction. So probably some sort of aggressive entry. I can take an aggressive entry in there without a breakout structure. 0.2% risk. If I'm risking 0.5, let's just say that in there some sort of right in there. So this is my aggressive entry, right? And once I get this breakout structure, I'll be scaling in. So this could act as my point of interest. So now I'll be scaling in like 0.3% for the, to make the whole trade a 0.5% risk. There we go. So I'm already in 0.2% in here, and I'll be in if price taps into my order block or that thing with 0.3%, which sums up to be 0.5%. Now I don't use that much stuff. It's just like basic liquidity stuff. That's it. You won't see me using any sort of like those, what do you say that? Those difficult terms or that stuff. I just try to keep it like simple as stupid. If it's a SL, I'll just lose 0.5% because that's what I am willing to take the risk on the both positions. It's not 0.5, 0.5. It's 0.2 as an aggressive entry and 0.3 as a safe limit entry, which sums up to be 0.5. So either cases, I am taking the same risk. That's usually when I take the aggressive entry style. No, I don't trade risk 0.5 per trade, as I'm trading like my personal account, so it's always higher. And like I have discussed that when I open the charts and like how I start marking my stuff up, you can like watch the previous session. Like I have discussed that fully there. For prop firms, I'd say that you don't spend, I won't say spend, you don't waste your time on the challenge phase. So start, if you know and you have the data, you can start risking 1% straight on the prop firm and pass that account as fast as you can. That's it. For me, risking 0.1% on a prop firm account is just foolish. Like I don't know like how much trade so you want to take to pass that account, and it's just like waste of time. Yeah, once you get funded, you can start risking from 0.3 to 0.5%. That's it. But on the challenge phase, on the passing phase, I won't say that you risk 0.5 or 0.2 stuff. 1% is good if you know that you can, if you have the skill set and that is proved by the data, you can start risking 1% to, don't waste your time on that stuff. What is AV options, man? I don't know. So let's just write in there. So this is what I'll recommend you to do, because I don't want anyone to like waste 2 months, 3 months passing a single account. That's not worth it. And you won't even get anything. So pass, the challenge. Oh, features. Now, I don't know like if I'll move to futures, but I'm like quite happy with the Forex, so I do trade this Nasdaq stuff. For me, Forex is really good because it's making me money while like move to any other stuff. But yeah, it's an advice for you all. Like, don't just waste your time on passing a challenge. Don't waste like months on trying to pass a challenge. Yeah, then what's the best thing you can do is like top up an account with $100, start trading like with 0.01 lot, which is the least, till you build confidence, and then you go for a perform challenge. Otherwise it's just foolish to go and buy a perform challenge directly. Well, I don't even think that they are still worried for us, right? Because you can just Google the percentage of retail traders that don't even think about you. So that you can keep using the same stuff. Like if you look to the past, everything is working the same way. Nothing has really much changed. And yeah, the percentage of retail traders is really low. So they won't even feel you what you are doing in the markets. Like the percentage is I think around 3 to 5%, if I'm not wrong, the last time I checked. So yeah, you can like keep using the concepts and make money. I think like we are good for today. And if you guys have like any more questions before I end this one, feel free to ask, and then I'll end this. I'll share this like article you guys can read about the cash flow, and then you can obviously go to the YouTube and watch some videos regarding it. So there we go. I just posted that in the crypto section, so you guys can read this article as well, and then go to the YouTube and watch some videos to get the fundamentals and then start into the crypto. Cool, bro. Yeah, we'll talk about that stuff. And it's also better like if you guys can learn some sort of the fundamental financial stuff, the fundamental analysis as well. That would also be really good, right? Because the technical analysis or the candles are just the visual stuff of the fundamental that's happening throughout the world in the forex, so especially in the crypto as well. I think like by the late October, November, we'll have some sort of good movement in the alts. That's what I think, and few of my friends as well. So we'll just wait. And yeah, I don't really think that crypto is now really going to outperform its last bull cycles, or you can say the bull runs, right? But if you can catch a good narrative, you can easily make like 50 to 100x. It's just like, man, you can say that we still have quite few months till we get the cash flow from Bitcoin to large caps and then mid caps. So most of the cash flow is in the BTC at the moment. We have this like let's just go to a 4-hour daily chart. Yeah, so you can like see this dominance, right? Once it settles down low, and I'll with that we'll really have nice movement in the alts, right? See this? Yeah, so that's why I'm saying that we can have some sort of really good move. That's why like late this year we'll start to see some sort of good moves in the alts. And this, you see that how low this one is? So yeah, that's why I said like late this year we'll see some good movement in the crypto. That's it. Yep, they have like some sort of regulations on them as well. Like they were just like creating those stuff without being backed by some real assets. I don't know, like it is still the news in the crypto space. I don't know like the authenticity of that one, but it is. Yep. Yep, it's a good conference. Cool, guys. I think it's like a good talking session or bit of Q&A session today. I'll see you like in the next one. I'll try to bit more regular, and I just can't. I do have like quite a lot of stuff to do. Yep. I'll try to do like at least 2 to 3 sessions a month, man, but it's really difficult. So yeah, and again, apologies for my bit of inactivity because I do have like 4 or 5 stuff, like at the same time, so it's a bit difficult for me. That's why I like trade for 3 hours or 4 hours a day max. All right, let's just stop streaming. Though I'll share the crypto stuff. Let me get the good ones first, so you guys don't waste your time anywhere. And then I'll like make a good post for everything, and I'll like mention you guys there. See you guys. And one more thing, like if you guys like, let me just start off. So you guys can tag Jim if you guys have any crypto related questions, because he's the one. He's really good with crypto.